Hi, welcome to the Guaranteed Retirement Guy Show. My name is John Stevenson, and we're going to be talking today about the best annuities for self-employed individuals. So there's a lot of you who have your own business. You might have employees working for you. Maybe you don't. But for most of us who have our own business, we will try to limit the amount of income that we can show on our tax return. And of course, this can bite us in the butt later on, because if we are limiting that, which means we are also limiting the amount that we are paying into Social Security, which means we don't have a high Social Security payout, and we definitely don't have a pension, okay? And you might be, or you may not be, setting up a 401k for yourself. Maybe it's a solo, maybe it's a SEP, maybe it's a simple, or maybe you're just funding an IRA. Maybe you're not. And maybe you're just saving money on the side. You're putting it in a stock portfolio, or you might want to sell your business and use the money from your business. I mean, I've done that before. I have sold several companies, and you get cash and you can invest them, and I've done that. So that's a lot of times what people's game plan is when they sell their business, then they're able to use that money to fund a pension, or in other words, an annuity. Okay. So we're going to be talking about the best annuities to do that, because I just helped someone with this last week, and he's been self-employed for many, many years. He already had an annuity, but he needed more pension income, because he didn't have a Social Security. So he wanted more pension income, and he had saved up, he had invested. And so he wanted to turn some of that into some more lifetime income. And so we set that up for him. So I'm going to share my screen. I'm going to show you how this would look for you. All right. So I'm basing this off of someone in Colorado. They've got $1 million, and this might be too much. Maybe it's too little for you, but it just depends on your situation. If you want to go to my website, johnstevenson.com, you can actually use my calculators there, and they're updated every day. So you'll be able to see all of the highest lifetime payouts there. So it's johnstevenson.com, and you can also book a call with me there as well if you want to chat about annuities for your own situation. All right, so this is $1 million. Let's say you've got $1 million that you want to put into an annuity contract, and you want to defer it out for 5 years. So you want to take income in 5 years. You're married. Your spouse is the same age, so you're both 65, and this is going to be different all over the board for everyone, because everyone's different. You might decide to do this at 55 and defer it out for a year, or 60 and defer it out for 10 years or 5 years. It all changes depending on your age, your state, whether you're married or not, whether it's a single or a joint payout. Okay, so this is very subjective to just this particular scenario. So that's why I invite you to go to my website, johnstevenson.com, and find out for yourself. I am also using the Income Rider Calculator. Income Rider Calculator, you often, not always, but most of the time, it will give you the highest annual payout. All right, so if we look at this, it's $84,750, guaranteed for the rest of my life and my spouse's life. Not bad. That's from National Life Group, followed by American Equity, Midland, and all the rest of the companies. So if you're looking for highest payout, this is a no-brainer. I mean, National Life Group is just awesome. So $84,750. Now, if let's say you're just a single male, are they the highest? Well, let's look. They are. All right. So it goes up, what, another $6,000, $7,000? That's pretty good. So again, that's guaranteed for your life, not your spouse's life. And so you just have to realize if you die in the next 5 or 10 years, they're just going to get a refund of whatever's left in your account. Okay, it's not going to give them lifetime income. They're going to have to use that money to produce income somewhere else. And if you've been taking this income for 20 or 30 years, there's probably not going to be anything left in that account for a refund. So you have to realize that as well. People will set this up though, even if they're married, because they got life insurance, or their other spouse maybe they're 20 years younger. They have their other accounts. Like, there's just a lot of different scenarios. So there's no wrong thing to choose. It just depends on your situation. And you can buy this and choose later. You don't have to choose a single or a joint payout in the beginning, okay? Unless it's a SPIA or a DIA contract. If you do those, you have to choose right in the beginning what it is. But with this, it's totally flexible. You can take the income whenever you want. You can defer it out as long as you want, and take it earlier if you want. You can change your mind. You can cancel it. You take your cash back. There's so much you can do with an income rider. So, and it often gives you the highest payout anyways. So that's why most people pick this. Okay, so $92,250 if it's a single payout. All right, well, let's change some numbers here. Let's say it's like, all right, John, well, that's a lot of money, but I only got $400,000. Okay, only $400,000. That's still a decent chunk of change. So $400,000, you put that in, you still defer it out the same 5 years, and you're single. The payout is $37,000. So roughly $37,000. That's not bad. What is it for a joint? For a joint, It's not much difference. I mean, what is that, like a $3,000? Yeah, 34,000 versus 37. If you're married and you know your spouse isn't going to have any more income after this, you're not going to be able to use other assets to produce it, I highly recommend selecting the joint when you do turn on income. So that's what I would recommend. Now, it's definitely going to be less though if you take income immediately. And I don't know if National Life Group is going to be the highest. No, they won't. Yeah. So Midland National though is, so 21,800. Not bad. They're A+, just like National Life Group. Solid company, and they also base it off of, I mean, yeah, this is immediate, so this is next month. I was just going to say birthdays. I mean, if you defer it out, they base it off of birthdays, like anniversaries, versus 1 year intervals from your issue date. So, anyways, if you're looking for highest income, joint income, it's $21,800. That's from $400,000. That's because it's joint. Okay, so if I was to change this to just, let's say, a single male, it's a little bit more. It's $23,800. So it just depends what you're looking for. If you're single, whether you're joint, really what you're doing, especially as a self-employed individual, is you're planning for the future. And so if you're self-employed and you're not going to retire, maybe you're still running your business and you might sell it or step out in like 3 or 4 years. I highly recommend that you look at purchasing an annuity now so that it grows for the next 3 or 4 years to give you higher guaranteed income. What if you're 65 and you're like, well, I'm going to retire at 67. Okay, 2 years from now. What will $400,000 give me? Well, it gives you a lot more. It's $28,000. That's for a single payout. For a joint payout, let's see what it is. It's $25,680. See, so it's definitely good to buy now and defer it out and take higher lifetime income later on. So it's really important to just think about your planning. Think about when you want to take income, and think about doing something early rather than later, because you have that benefit. I mean, look here. They're going to take $480,000 right here. They're going to multiply it by 5.35 and give you $25,680. And that's because you let it sit there for 24 months. So when you do that, you have a higher payout. And if you can see, if you take this out until you're 95, you get $744,000 in income. It's really good. Now, one thing I was not sharing with you, that I'm about to share with you, is this is a no fee option. What does it look like if you pay the fee? The fee just comes out of your account balance, does not change anything except the income. What does that look like? Well, let's change that. Now it jumps quite a bit. $34,000 a year. Wow. So let's go back. What is that? $400,000 starting income in 2 years. Joint income, $34,000. Wow. What a difference. Okay, let's go back to the original example. What does it look like at 70? Okay, at 70 years old. Now it's $44,000. And that's all because you decided to pay the fee. Okay, now what does that look like? Well, the income is definitely higher. It's $44,000 a year. And if you notice the balance, let me look at it with decent growth. Even with growth, it's going to run out. See, it just runs out faster. That's the only difference. So if you want it for a death benefit, don't pay the fee and take the lower income. Otherwise, if you want higher income, pay the fee, because it's only coming out of your account balance. It's not coming out of your income. This income is a standalone benefit to you. So you look at that. Now it's like a $1.1 million payout net to you. Okay, the fee's coming out for sure, but it's affecting the account balance and it's affecting the death benefit. But if you don't care about the death benefit, then pay the fee. In my opinion, it's well worth it. You're probably paying $100,000 in fees for another $300,000 or $400,000 in income. You just have to ask yourself, is that worth it? In my opinion, it is. So there you have it. You've got the fee and the no fee option. If you're self-employed and you got your own business and you're like, I need as much income as possible, well, now you see. I mean, if I'll go right back up to $1 million. Let's just look at that. Since we started with that, I'm going to end with that. All right, so $1 million, same deferral. I still have it as joint. And remember, it was what, $84,000, I think, with the no fee. Okay. Ooh, look at that. It's $110,000. Wow. Now we're looking at what? Another $26,000 a year in guaranteed income. That is huge. So, my opinion, it's worth it. Pay the fee, but you don't have to. It's totally up to you. It's if you want the death benefit to last longer, don't pay the fee. And if you don't want as high of income, then don't pay the fee. But you can see, that account balance runs out. By the time you're 80, it's gone. Okay, but the income, you've taken out almost $3 million by the time you're 95. You live longer, you take out more. So in my opinion, it's worth it to pay the fee, but that's totally your call. It doesn't matter to me. My commissions don't change if you don't, because the fees go to the insurance company, not to me. The insurance company just pays me a commission. So that's why I show everything available, because some of these pay high commissions, some of them don't, but it doesn't matter. For you, you need to be able to see everything that's available. You need to be able to see the highest payout, and then you can make the decision for yourself. So you can go to my website, johnstevenson.com. You can look at the calculator, see for yourself. You can book a call there if you want to. You can book a call below. There's a link below this video. And I'd be happy to go over any of your annuity questions. If you are thinking about purchasing, I'd love to talk with you. So I'm not going to try to hard sell you, but I would like to help you if that's something you're looking for. So anyways, hope this helps. If you like the video, make sure you like, subscribe, share, comment below. Really look forward to chatting with you, and we'll see you in the next video.